Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, as you can see that we got a big red candle on the chart of gold as expected, as discussed yesterday, and ultimately market closed at 1969. Yesterday we discussed about the possibility of market going down and taking a sell around 1977. If you look at the chart like this, then it seems to be very beautiful and nice, but I also took a sell position around 1977, around 1976.50. But before forming this candle, market showed extreme volatility, and to be honest, I had to exit around 1973.50 because market was so volatile and market was showing too much spikes, too many spikes, that I got scared and I thought that it's better to book my profit around 1973.50, and I could not make it till here. My TP was around 1970. And this is the main reason, my dear friends, I have been telling you guys to book your profits after 40-50 pips, because for the last couple of days market has been very crazy. Okay, so let's discuss the possibilities and the trading opportunities on the chart of gold for Monday. But before I proceed, I would love to take you to the chart of DXY. DXY and gold's correlation is not going like the previous times, but still knowing the moves of dollar is very important. Dollar closed at 102.59. DXY took support around 102.2010, and you can see that DXY is trying to recover, but we should not forget that the overall trend of the market is still very much towards the downside. So this recovery, okay, will not be very easy for DXY. There will be multiple resistances, so as a result, okay, we can still consider the market to be under the dominance of sellers. Okay, on Monday, if the upside continues also, the next resistance will be around 102.60 and then 103. Okay, these are the two resistances on the chart of DXY that will create some problem on Monday. If there is any news comes out during the weekend, then that's a different chapter. But if the market remains like this, okay, then there will be some problem for DXY in showing some recovery. And if we look at the US government bonds, then the government bonds is showing some correction. As I have already mentioned in my previous videos that, okay, after forming this high, okay, bond showed the intention of showing a recovery. So as a result, the next low of bond will be very important, because market was forming lower lows here, but here market did not form a lower low. Market formed a low of the similar high. So if market wants to go higher, if really market wants to recover, then it will have to bounce, it will have to go up, forming a higher low. Means it will have to bounce from either 3.40% or 3.35%. Okay. So this is all about bonds and DXY. And if you look at the news, then you can see that gold prices in lower but score gains for the month and quarter. Okay, and now let's discuss about the chart of gold. So first of all, after the market opening, if you see gold going down, then the best buying opportunity will be around 1964.50 to 1962.50. This is the first trading opportunity or buy opportunity on the chart of gold that will come to you if market starts falling or showing downside after the market opening. Okay, 1964.50 to 1962.50, and the reason is, you can see here we have previous price rejection around the area, plus we have Fibonacci around the same area. In addition to that, we also have the trend line coming from the bottom. So So this area 1964 to 1962 seems to be very strong support for the market. Buyers should be present, and we can definitely expect the market to bounce from this area. Usually we do not get to see crazy volatility during the first half of Monday, during the Asian session and European session. If Monday market acts normal, then we can definitely expect the market to bounce from this particular level. And if market suddenly breaks 1962, then things will be quite critical, because you can see here, if market breaks 1962 level, we do not have any proper support on the chart. The next support, or the next best support on the chart, will be around 1945 level. Okay, around 1945 level we have the next best support after 1962. There are supports around 1956, but these levels are not very strong. If market breaks 1962 level, which is a strong support right now, then 1956 may not be able to hold the market, and 1945-46 will be the next strong support. So two strong presence of buyers around 1945, 62, 64 level. If market bounces, well and good, you can definitely expect a buy position. Okay, but if market breaks 64 level, 62 level, then there's a very less chance that market will get some support around 1956 level, because 56 is a minor level. Here, if you're confused right now, then let me repeat it again. We have the best support or the buy opportunity around 1964, 62, 64.50, 62.50. So under normal circumstances, we can expect the market to bounce. Okay, in case market shows crazy volatility, because market has been extremely unpredictable for the last couple of weeks. So if market takes support, well and good, go for a buy. I'll also go for a buy. And in case market breaks it, okay, in case market breaks it, then we have a minor support around 1956. Okay, so if market takes support on 1956, well and good, but if the selling pressure is very high, then do not expect market to take support on 1956, because it is a minor level. Okay, and the next strong level will be around 1945. Okay, two good levels, one weak level, and another good level is around 1934, 35 level, but that level is quite far away, so we don't need to worry about the level right now. And if market shows upside on Monday, then we have a resistance, or I'll say we will get a selling opportunity around 1993. Okay, around 1993 we will get an opportunity. Before that, you can also look for some selling opportunity around this level. Okay. But the problem is that for the last couple of days, I have observed that the static resistances are not working nicely. Okay, so you need to observe the market first. And moreover, the market is overall in uptrend, so as a result, okay, you need to be extra careful. That's why I am only giving you one level, that is 1993, and the reason is the Fibonacci 78.6% retracement level, plus we also have the trend line. Okay, trend line coming from the top. So 1993, 1992 looks like a good level where day traders can expect a reversal, and you can look for a sell position 40-50 pips. Okay, so these are the trading opportunities that I see on the chart of gold right now. If I have missed anything, please write down in the comment section. My dear friend, I am also a trader like you. I also make mistakes. No trader is 100% accurate, so please follow proper risk management. As I always say, capital protection should be your first priority. Do not gamble with your capital. Bye bye, take care, enjoy your weekend.